Hi, it's Eric Nuttall of the Ninepoint Energy Strategies. I've been looking forward to this conversation for many, many weeks. I'm joined by Amrita Sen, who is the founder and director of research of Energy Aspects. We've been a client of Energy Aspects for several years anyways. We've gotten to know each other. Amrita and her team has really helped us navigate through what has become an incredibly volatile and complicated area, that of energy and oil. So I'm very, very happy to have her here. For about 30 minutes, we're going to discuss a wide range of themes. So welcome to Toronto, welcome to Canada.
Thank you, Eric. It's such a pleasure. Like you said, I mean, likewise, I've been looking forward to this conversation for a while and love talking to you.
And I think we may be one of the last remaining oil bulls in the world. And by definition, these days, that means we don't think it's going to go to $40 or $35. There's just sentiment is terrible. And I wanted to start with that theme. When we look at the market today, we have oil demand at all-time highs. We have global oil inventories at seasonal all-time lows. In fact, they reached their lowest levels in recorded history earlier this year. And yet sentiment is just so deplorable. How do you explain that?
Don't let data get in the way of a good story, right? I found that right throughout this year. Like you said, you've actually highlighted the challenges we've faced as well. If you look at inventories, and we've done some correlations with crude flat price, there was a time this summer we should have been $87 Brent prices and we were at 72. So there is a complete disconnect. And I think this year it's been more pronounced than any other years, I would say. I completely appreciate some of that negativity in terms of Chinese demand has been very weak. Absolutely, yes. But all this hype about non-OPEC supply growth, we started the year thinking it would be 1.1 million barrels per day, and now we're tracking 300,000. There's been no mention whatsoever anywhere about this other than the reports like we write or you're talking about it with some others who talk about it. So I think it's been a combination. China has definitely been a scare for the market because China has been the biggest growth driver. But I also find the media coverage or overall fundamentals being quite biased in terms of just focusing on one thing versus the other. Two other things I'd say, I don't think the US elections have helped because I think there has been a concerted effort by the US government to get prices down. When I'm in Asia talking to Asian refiners there, they tell us openly that the US administration has said to them, go ahead and buy Iranian oil, we're not going to sanction you. And it's hard, right? If you're not really speaking to them, you're just thinking, oh, okay, Iran just can export. Well, they can export because nobody's actually enforcing sanctions. And I think the final point has been, we've just seen people become not interested in oil, partly because of all this meddling with like the governments kind of coming in, openly telling one thing, but then doing something else in the background. Of course, OPEC has tried to keep a floor under prices. And I think in the grand scheme of things have done a very, very good job in terms of stability. But yeah, you just haven't seen the market kind of pay attention to prompt fundamentals. Everybody's pricing in 2025, 26 balances where, as you know, the narrative is so bearish. I think this is the first year I've seen where we have traded next year's balances more than this year's balances.
Right. And I love the observation that you made, and we actually did a tweet for it because it was just so important. In an election year, you have existing U.S. sanctions. We'll get into it later on in this conversation, but you have the U.S. government explicitly telling Asian refineries, go ahead, buy Iranian barrels, buy Russian barrels, we won't enforce our own sanctions. It's been such a fascinating year. And for anybody that thinks that OPEC has been manipulating the market, perhaps over the past couple of years with the SBR release and now with lack of sanction enforcement, maybe the White House has actually been one of the larger meddlers in the energy market. It's fascinating. So when we look at the biggest drivers of bearishness for 2025, you mentioned non-OPEC supply growth. The biggest constituent of that is U.S. shale. Your work points out that U.S. shale is growing at the slowest pace this year, 2024, going back to either COVID or 2015, 2016, when there was the Saudi shale battle. Why is U.S. shale production slowing down so much? Why is it so important to the broader market? By your own numbers, you look at over the past 10 years, non-OPEC supply has grown by 5 million barrels per day. U.S. shale has grown by 6 million barrels per day. So it's been all of the growth and then some of the past 10 years. So I try to set it up, but why should we care so much that perhaps U.S. shale is finally in its twilight? And what does that mean for the energy market going forward?
Like you said, it has genuinely been the biggest driver of non-OPEC supply growth, and also the scale of it, right? It wasn't growing at a steady 200,000 to 400,000 barrels per day. When it was growing, it was 1 million barrels, 1.8 million barrels per day. It was just the sheer volume of what was coming out. I still think, even with our numbers, and by the way, when you talk to the majors or even the big independent producers there, they will tell you as well that it's starting to plateau. In fact, our numbers suggest that the plateau is there for a bit longer into 2030 and then it's declining. Some of the majors even have it peaking in 2026, which is right around the corner. So, even on our numbers, like you said, we are cautious. Some people are even more cautious than us. But I don't think that's necessarily sunk in terms of market sentiment or what that means. And immediately people will deflect and say, oh, but US doesn't matter anymore. There's Guyana and Brazil. We can come on to that. I'm sure we will. But for me, the fact that black oil in particular, and I think this is very, very important, that we are not talking about NGLs, we're not talking about gas. And there's so much focus right now with Trump's victory that Scott Bessent, who's the Treasury Secretary nominee, has come out with this 3-point plan. And one of his points is we are going to be growing 3 million barrels of oil equivalent in 4 years' time, right? And everybody's obsessing with that now. So they don't necessarily believe our numbers that it's plateauing. But yet, and I think we've put out a piece openly talking about it, that, yeah, we can grow 3 million barrels of oil equivalent. The equivalence is going to do all the work. It's NGLs and gas. Yeah. We are running out of tier 1 acreage. I think that's the reality of it. You were at our London conference. Harold Hamm, who is the father of Shale, biggest producer in the Bakken, he was on stage openly saying, we can't grow in the Bakken. Why would he say that if he really believed? And I think this is one of the things people don't realize is that regardless of deregulation, regardless of whatever else is going on, if you run out of tier 1 acreage, the cost of production goes up. The acreage is also getting gassier very quickly as well, even in the Permian, just when you get to tier 2 acreage. And also, if you think about the strip, WTI is in the 60s for next year. We're not going to get growth production. I mean, and again, if that stays the case next year and the year after, nobody's going to be incentivized. So I find it hard, I will not lie to you, when this euphoria around shale and now it's not there and somehow it hasn't been reciprocated on the other side. So people kind of realizing that actually this is a big deal. Yes, there is other non-OPEC supply growth, but shale not being there, kind of becoming steadier, more NGLs growth is a huge deal in terms of the medium term. Maybe not this year and next year, but over the medium term, I think that's one of the most significant things that's going to happen.
And I wonder if the market is like the boy who cried wolf, right? Shale, I would say, for many people has grown longer and stronger than people believe.
100%.
Many people have called the peaks in the past, but we're finally seeing it. So it's not just us seeing it, but when the producers themselves, when the Chevrons are talking about taking their Permian asset to 1 million barrels per day next year and keeping it at a plateau and using it as a mechanism to harvest free cash flow, when you've got, the Diamondbacks even referencing, well, why would we grow when there's spare capacity and we're going to moderate that? When you've got Trump talking about energy independence in the US, and it's just, so you would agree then under the Trump presidency, the next 4 years, it will bear witness to the peak of US shale production.
That's our view. We don't think US shale liquids will peak. Gas will continue to grow, sure. NGLs will grow, but black oil, we absolutely think it's going to peak.
Yeah. And so if you were the Saudi energy minister, if you were within OPEC, would you be worried about ceding supposed market share in the near term? Because that's one of these ongoing bearishness views,
yes,
right?
Yeah.
They're losing market share. What are they going to do? Shale's just stealing it. They're going to grow forever. And eventually they're going to have to do a repeat of the mid 2010s and swamp the market. It's just, to your point, we're in an environment where narrative sets price and price sets narrative. Everybody truly wants to be bearish now, and it's just so much nonsense that you and I read. Especially, I've seen your connections and the insights that you get, and so often I'm sure this
point comes up.
You read columns, you read articles, and you're like, what are they talking about?
So the market share thing is a personal pet peeve of mine, right? Because for two reasons. One, the simple answer is I think they are very aware, and I would say the OPEC ministers have even said to me this year, and I've definitely lost a bet against someone who said to me, non-OPEC supply will not grow that much. And it didn't grow that much. And I was like, no, it's going to grow at 1 million barrels per day. I think they are good on supplies, right? I mean, they are producers. They know what's going on. They talk to CEOs. They're talking to Chevron. They're talking to Exxon. And they have the communication that says to them, things are plateauing. One of the biggest reasons why I think Russia and Saudi also now see eye to eye is, remember when we did have the price war, Sechin who runs Rosneft, was very much like, we're losing market share to the US. That is no longer even a topic. Now, you could argue that Russia doesn't have any other friends and it's only the Saudis, that's
Right.
fine. But genuinely, they do see that shale is plateauing out. So I think that's also why. And actually, Novak said this in September, which very few media outlets picked up. He explicitly said, we are okay to cede market share in the short term because we know we're going to get it back in the long term. For him to explicitly say that, that's a big thing. But my pet peeve is more around the fact that people are not even looking at what Saudi Aramco is doing. Look at Aramco's strategy. It has been going and buying refinery stakes in China, in other parts of Asia, or doing long-term deals 20, 30, 40 years. That's what securing market share is. They have guaranteed market share in Asian downstream refining for decades to come. Nobody kind of puts the two and two together. I mean, they are not talking about, oh, am I going to be exporting 6.5 or 7 million barrels per day today, tomorrow? It's the decades to come. That's how they plan. And they've already got that guaranteed. And they are continuing to go and do refinery deals. How many US producers or Canadian producers have done that, right? And I think that's where the mismatch is that when it comes to long-term security,
Yes.
they know what they're doing.
Yeah. So we opened up talking about how fundamentals, maybe they weren't as strong as we would have expected coming into this year. But fundamentals remain fine, especially looking out a few years from now. But sentiment is so challenged. And we've talked about how the view largely triangulates around balances of 2025, and really this view that non-OPEC supply is going to grow in excess of demand. So I want to touch on the variables that go into non-OPEC supply assumptions and try to detect, okay, where might there be either two bullish views or two bearish views. So the biggest one has been Brazil, of course.
Yes.
I believe you're looking for about 400,000 barrels per day of growth next year. Similar kind of numbers for this year. You referenced earlier that they've disappointed. Can you speak to why has there been disappointment, and what does that suggest potentially for 2025?
Brazil, I would say, for me, for balances next year is probably going to be even more important than the US, partly because we are saying that US, it's going to grow, but not by that much, right? Yes, you've got Matterhorn pipeline and stuff, so we'll have some more growth next year than this year, and Gulf of Mexico production as well. But Brazil, we started this year with 300,000 barrels per day of projected growth for Brazil. It's now down year on year. Couple of issues with the regulator went on strike, so they couldn't do a bunch of kind of tieback wells and so on. But that was in August, and that was for a month. So I can't quite buy into the fact that, sure, there are probably some delays, but that can't be the main reason why production is down. We've heard quite a few things from Petrobras and others about, small things like, oh, we don't have enough tugboats. And I'm like, how does that matter? Well, it matters because you can't get the people over to the platforms for maintenance. But those things, I just find it hard to believe that you can't solve it, right? They seem solvable, and yet they haven't been. For me, the most interesting thing is we have found, having done some really good analysis or detailed analysis, well level, with prices, that post-salt, which is their older conventional production, has a very strong correlation with lagged oil prices. So in 2022, we actually averaged $100. It was 99.5 for Brent, right? And that's why I think we had the outperformance in non-OPEC last year. And people still remember that, and they're kind of fretting about that. Last year, we averaged about low 80s for Brent. And if low 80s isn't high enough for post-salt, and you can see in our data, post-salt production declines have been accelerating this year. This year, we're just about 80 average for Brent right now. Let's say we end up at 79 and wherever. But that's not a high enough price by the looks of it for production to be sustaining. And I mean, I'll come on back to Brazil, but Mexico is another case, by the way. I think that's going to be potential for significant downside risk. Because of, again, at these price levels, they seem to be struggling to deploy or just kind of invest. So I think there are, 7 big FPSOs coming online in Brazil from now to the end of next year. There will be some growth, but I think a lot of people probably have 600,000-700,000 barrels per day, or maybe 800,000. We've got 400 in part because we are offsetting it with the declines from the post-salt. And if Brazil continues to be as bad as it is, I mean, that's your single biggest delta on non-OPEC supply. I think then it tells you fundamentally there is a bigger challenge.
Yeah. So that's Brazil. We've got United States. We've talked about, I think you're looking for about 360,000 barrels per day. We referenced strip as well below the price required. So maybe that's slightly high. What about Canada? I think you're looking for about 250, 260.
Yes. So we've got Canadian production growth between 2 to 300 for the next couple of years. And let's not even get into tariffs and whatever else could happen.
We will.
Could
It's coming.
happen. But we do think, look, there's enough pipeline capacity. TMX has woke up availability as well. Some of the money is sunk already. But I mean, you'd be much better placed than I in terms of the Canadian production growth. It's also the next 2 years. After that, we have it kind of flatlining as well, because even Canadian producers aren't necessarily getting rewarded to grow production a lot.
They're not. And we've tried to influence that as well. Our big view is companies, especially at a time when there's spare capacity, and we'll discuss just how much, how are there vapor barrels or whatnot, but why as a company would you grow oil production at a time when Saudi, UAE, OPEC at large, OPEC plus is helping you out by removing barrels? It makes no sense. Instead, keep production low, maximize your free cash flow, use it to buy back your shares. And we've seen a very strong correlation between share buybacks, the quantum of that, and share price performance. So I think from an investor's perspective, there's no appetite for growth. So let's dig into non-OPEC growth expectations going forward. Your work, we just, again, started subscribing to your medium-term outlook. I find it very, very useful, especially to frame the conversation that this is a multi-year investment theme. It's just not about the next quarter. When we look at forecasts, you have peak non-OPEC supply in 2028, which isn't that long away. And it's not, people always manifest about peak, but it's really about the growth rates.
Yes.
Very, very modest growth rates after next year from non-OPEC. So in terms of the significance of that, it should be obvious, but perhaps it's not. What does that mean for the oil market when you have non-OPEC supply reaching peak? We'll touch on demand later on, but my view is demand for oil will grow much longer and stronger than consensus. What does that mean for OPEC and their growing significance in the oil market?
And I think this is exactly what people like Alexander Novak are saying, that they see this and they see therefore OPEC will be able to bring back the barrels. They have spare capacity now, but I would say even when you sit down with Prince Abdulaziz, he's genuinely worried about what happens at the back end of this decade, about the lack of investment. And what they also don't want is prices at $120 or higher, right? Because you don't want to kill demand either. They want stable prices. I think that's kind of been the issue, but obviously not like $40 prices either, right? I think the challenge we get, or I face when we're talking to producers, or anybody, not just producers, I would say are actually more in line with our view that they do see that peak. When you're talking to investors and hedge funds, they are very much of the view that, like you said, it's a bit like crying wolf. We've talked about this peak. It's actually not happened. Guyana came out of nowhere. They'll say there's something always coming. So maybe what we need to see is actually happening. But then the price reaction could be asymmetric, that prices just kind of shoot higher because then people are like, okay, it's actually happening.
Yes.
So I think maybe that's where, of course, now the narrative's like, oh, yes, maybe non-OPEC peaks, but demand's also peak, right? That's also like I said, you just kind of come up with an excuse regardless.
We're in a market that wants to be bearish, for now at least. So let's touch on OPEC, because I think for many, especially who haven't had the privilege of sitting down with people such as Prince Abdulaziz bin Salman, the Minister of Energy of Saudi, where you just, the contrast in meeting him versus energy ministers in countries such as Canada, where our own minister said, well, the demand for oil may actually be peaking this year and natural gas in the next couple of years. And anybody who does work just knows how much energy ignorance is steeped in those comments. It may sound odd to hear that the representative of Saudi Arabia is worried about lack of investment, is worried about too high of a price. You touched on it, but I want to get into that a little bit more. Why would Saudi Arabia be worried about too high of an oil price?
I think this is one of the most critical questions you've asked, right? Because people paint OPEC as, oh, they just want high prices and whatever else. No, what they are talking about is they want a high enough price which incentivizes investment. Call it, I'm just like giving you a number there, but call it about $80, right? And you could argue it's 90, you could argue it's 70, but let's say it's $80. Especially, I think new projects, you'd probably say it's higher than that, right? But fine. The point is that if you don't have that, let's say you're in 50s and 60s, you're not going to invest. And then what happens is, and we've seen that in the past as well, you get cycles where prices just roof and you're at 100 plus. We've seen that between 2011 and 2014. And then you get cycles when they collapse because, you're killing the economy, you're killing demand. How is that going to be useful? Because the fundamental misunderstanding I find in the market about OPEC is that the market doesn't realize OPEC thinks long term. They are not traders. They're not trying to maximize volatility. If anything, they want to reduce volatility. They want stability in the market. And what they are trying to do is saying, look, we need to find a price which is good for both sides. Obviously not too high for consumers, but if it is too low, if you're not going to invest, then you're just going to create a rot for your own back. And I've kind of picked this up more and more, that it goes both ways, right? Consuming countries and governments will talk about security of supply. But if you want security of supply, you also need to give security of demand. And I think that's exactly what they're trying to say, that, look, we need a high-ish, or what I wouldn't call it high is the wrong word, but we need a stable price which is just about right to get that investment. And that it's not their fault with geology, with ESG pressures and everything that we see, that price level has probably gone up. If you said to me it's 90, I wouldn't necessarily bet against you. Like, it just depends on where that price is. And I think that's what they're trying to achieve in saying we need, because OPEC doesn't have unlimited spare capacity. At the latest FII conference in Saudi Arabia, he actually, Prince Abdulaziz made a speech for the first time ever, very, very specific in saying they need to replace 700,000 barrels per day each year just to maintain production. That's their decline rate. Officially, he's now come out and said that. So they are not immune to declines either, right? So they see that. And if you look at our OPEC projects, the peak is also in the next couple of years. Even they don't have a big pipeline. Wow. So that's exactly why they don't want a high price, then even they can't react to that, right? That's not good for anybody.
So let's go there. Let's assume, and we'll touch on demand later on, but this view that peak demand is right around the corner is complete nonsense. I think you would agree with that. We see geology and investors leading to a peak in U.S. shale in the next couple of years. And forget the peak; it doesn't really matter. It's you basically have modest, little growth. Yeah. Non-OPEC supply peaking. Mm-hmm. OPEC, you're discussing peaking later on
this decade, yeah.
And then spare capacity. And spare capacity, in my mind, is also contributing towards the negative sentiment that we have.
100%.
Because you have people that say, well, Eric, it's wonderful the global inventories are at the lowest levels in history, but they've got all this capacity that's going to come onto the market. Yeah. And I've seen numbers, as high as 8 million barrels per day. Can you explain for us, and there's sensitivity to this topic, but what do you think the real number is, and why do people believe that the number is significantly more than reality?
I think the second part of your question is a lot harder. I genuinely don't know why they think it's so high, right? But going back to the very first comment you made about spare capacity, if you ask me, the single biggest thing that's kept prices down this year is spare capacity, because I've literally had the same conversations, which is low inventory is great, but that's artificially low because spare capacity is so high, right? I think getting that OPEC spare capacity down is probably going to be the biggest trigger for getting prices kind of going again. And if we get tighter sanctions on Iran, which I do think is going to happen under the Trump administration, potentially even Venezuela, I think you're going to get that OPEC spare capacity coming down, and therefore prices kind of reacting next year. But our number is half of that. We are about 4 million barrels per day rather than 8. And even there, I think we need to be very careful about absolutely Saudi Arabia has spare capacity, UAE has spare capacity. There are some others here and there have spare capacity, mostly GCC concentrated, right? But like, we define spare capacity as something that can be brought online in 30 days and sustained for 90 days. For any of these, including Saudi Arabia, I would say, right? For every single one of them. Of course, we've seen them touch those numbers, 12 million barrels per day. Have we ever seen them sustain it?
Yes. Yeah.
And I think that's the question I'm asking. It doesn't mean they can't. I'm sure they can. But we have never seen that. We've never put them to test. And till we actually put them to test, we'll actually never realize what true spare capacity is. So there will be people who will actually say that, no, actually true spare could even be less than the 4 that we are assuming, right? It's definitely possible. But the other thing is, let's say it is 4. We should also consider who is holding that spare capacity.
Exactly.
Right?
And nobody does.
No, because if Saudi Arabia in particular has the lion's share of that spare, they have openly talked about they want to keep inventories below the 5-year average because they don't want, an oversupplied market. But also their whole motto is we want to revenue optimize. Why bring on oil when prices are going to be asymmetrically weaker, for instance? If they're constantly revenue optimizing, they're not going to just flood the market. But I don't understand why. I really don't see how you get to 8. Maybe you're including Iran and Venezuela and stuff like that. But that's the same as saying, I want to go to the moon. Like, I also want to go to the moon. But I don't think it's not available to the market.
So if Saudi has the lion's share of real spare capacity, I've written about like the will and intent. And so Can you just briefly talk about what do you think Saudi Arabia is trying to achieve? What are some of the dynamics of the country we've both been in the past year? I come back from that area of the world and I feel truly depressed. When I contrast, you see these governments, literate, highly educated, humble, and their desire to grow their economies, actually grow, not put like caps, production caps, but grow their economy and use their energy wealth to diversify their economies. It's almost inspiring. That sounds a little corny, but I come back every time and I feel depressed to come here. And you've got a young populations, you see modernization, all of these things. Can you just very briefly talk about if Saudi Arabia has the lion's share of real spare capacity, what do you think they're trying to accomplish with oil revenue as a country going forward?
And I think you've literally said it, right? It's a young economy. They're trying, and across the board, right? The push towards getting everybody in the workforce, getting to a point where, and by the way, they also genuinely believe and they're doing so much in energy transition. But the narrative on energy transition is slightly different, right? It's about a circular economy. Let's capture the carbon rather than, you feel depressed. I live in Europe. So Europe,
I can only imagine.
like you talk about capture carbon. That means you're producing carbon. How can you even say that, right? Can't do that. But I think that's where, so I find it very realistic, right? When you go there, even Asia, right? Like it's a very realistic thing because population is so large and so many people just are below the poverty line and they need to be brought back up. And that's why our view kind of goes back to the demand thing we were talking about. If you believe that global economies have to grow and there's a population growth that's going to continue and grow, like economic growth is going to continue, how can you say energy demand as a whole is not going to continue? Sure, you can have different growth rates of oil demand. We have renewables in theory is the biggest because the smallest percentage, right? Like that's why it grows the fastest. But on an outright basis, it's actually gas that's growing the fastest, and then it's oil. But they are all growing. You need all forms of energy. And I think that's what I always come back from the region is that they understand that. They understand the molecules and how it fits in and how important it is. And that's again why like I feel quite tired about this whole, they're going to flood the market, and it's just a bit like, literally, you've seen that for the last few years they haven't flooded the market, so I don't know why that would change. But the concept is that we are revenue optimizing within the framework we have. If Saudi Arabia believed that going to 10 million barrels per day instead of 9, which is where they are now, would keep prices roughly where they are, sure, they would do it. But if they believe now, given sentiment, that it would lead to a $20 decline in prices, why would they bring it online? Right? Yeah. I think that's what they, put it bluntly, I think the market doesn't give them credit about how they think about pricing, right? Like they're probably smarter than a lot of people kind of think about them. They're like, it's not a blunt force of, I'm just going to bring the barrels back.
Even the people on Twitter leave all these comments on posts. Say it ain't so. Let's touch on Trump presidency. You said when you travel to that area, when I travel, you there's a realism in the conversation about an energy transition. My own view is there is no energy transition when the absolute demand for oil, natural gas, and coal continues to make record highs year after year after year. The mix will change. So Trump has Chris Wright, the current CEO of Liberty, which is a pressure pumper. I've met him, very energy literate. He's literally written a book about how hydrocarbons lifts people out of poverty. Talk to me, what are going to be the biggest impacts of a Trump presidency on the energy market? We talk about drill, baby, drill. That's a quick one because I think both of us probably thinks it's completely toothless. I want to touch on Iran, how exports have risen so sharply under a Biden administration. What do you think Trump's going to do? And then just lastly, with somebody like Chris Wright in that seat, what's the impact on the discussion and maybe even the elimination of certain taboos where you couldn't even talk about certain things before, and now maybe we can?
We can. No, I think that's the most interesting thing. Like, but let's go through in order. I think Iran's going to be the most important thing. So we think you could lose up to 1 million barrels per day of Iranian oil. Under the previous administration, under the previous Trump administration, Iran only managed to export 400,000. Right now they're doing 1.8. So we're not even saying it's going to go down all the way.
Are you being conservative with that number?
Yes, 100%. Because look, the smuggling network is more sophisticated, it's better. But I absolutely believe that if the Trump president or the administration really goes maximum pressure, that number will be lower. The other thing which we've written about, everybody in the market says to me, oh, but China wants to stick it to the US and they're going to do this. China has put a cap on refining at 20 million barrels per day by next year. they want to shut the teapots down because they still have new capacity coming online. They need to close about 300 to 400,000 barrels per day of these guys easily. Why not say, okay, we'll actually listen to you, we'll reduce Iranian oil, in return don't tariff us on XYZ. It's not that straightforward to just say, oh, China's going to continue to buy Iranian oil. I think there are nuances and layers to this. In our China team, we have a big China team, they actually believe teapots could actually be the sacrificial lamb over here. And if that's the case, then Iranian oil exports will come down quite a lot. By the way, already now, with some of the sanctions President Biden has finally doing, with ships and some of the others, we've already seen Iranian oil availability in China go down a lot. The physical guys we speak to are telling us India today came out and bought a bunch of other oil because there's more Russian now going to China. They can't buy enough Iranian. That's why India's now buying other oil. So I think things are already starting to move. I know sentiment won't tell you that and the flat price won't tell you that, but I think that's happening, and for me, the number one thing. Venezuela as well. I mean, there's more oil there right now. I mean, it isn't in terms of coming out. Marco Rubio has been quite kind of anti-Venezuela. I think that's something to watch out for. Russia is the interesting one. I know we didn't touch on it as much. You will not believe this, Eric, the meetings I do. Even if you convince people on Iran, they'll turn around and say, but he has said he's going to end the war on day one and we're going to unleash Russian oil. And I said, how much Russian oil have we even lost because of sanctions? Zero. Yeah. Anything we've lost is because of OPEC plus policy. Europe is not going to buy Russian oil regardless, but even on a molecule basis, we're not going to gain any oil. And when he talks about, okay, our biggest thing on Trump is that, should we take him seriously? Yes, but should we take him literally? No. You're not going to end the war on day one anyways, right? So Russia is the other thing where his team are quite hawkish on Russia. We think they could actually tighten Russian sanctions first so that they can bring Russia to the table for negotiations, right? All of those things could happen. But in terms of Chris Wright, what you say is so important, right? Because he's extremely, like you said, I've met him once and he was extremely articulate about kind of his thoughts on energy. He doesn't believe in energy transition in terms of just generally, but he understands the importance of renewables, of other sources of energy. He's a very well-rounded in terms of kind of his thinking. I think things around, at least maybe some of the ESG pressures go away when you kind of talk, like when companies go and present to investors. There was a slide deck we used to always have to start with ESG. Yeah. Now, I think maybe those things go away. Of course, there'll be some stuff like CAF standards and they'll probably get removed anyways. The drill baby drill, like I said, I mean, I think Harold said as well, right? It's a cute term, right? Yeah. But I think he knows that. Chris Wright would know that. But I think in general, I'm hoping you kind of get a mixture of some deregulation, but also the balance of, yes, we'll also do nuclear, because that's also been a taboo in certain circles as well. So hopefully a bit more of a balance in terms of the narrative shift.
Yeah. So we're coming up on time, so we've got a few themes I want to touch on. One is demand. You referenced some of the drivers of demand. We've got population growth. The world's going to get 25% bigger between now and 2050. You referenced rising living standards. All of the growth is occurring in areas of the world where they consume 3 barrels, where the developed consumes 13. Urbanization. OPEC's gone out of the way to say, I think the stat is there's 500 million people that's going to be moving from the country into the cities, and you get a commensurate increase in energy demand. So, specifically on oil, when do you think peak is? And does demand for oil end the next day, or is it kind of like a flat plateau, a steep plateau? What are your views on peak demand?
So for me, first and foremost, can we say that demand growth has peaked? Probably, yes, especially after COVID, right? We had those 4, 5, 6 million barrels per day years. But that doesn't mean demand has peaked. And even today, I've had questions about, but Chinese demand has peaked. And I was like, no, it hasn't peaked. But anyway, park China to one side. On our numbers, our peak is 2032, about 109 million barrels per day. But I hate the word peak because that's like assuming it's like a mountain, right? You peak and then you come off. Even by 2050, and we have on purpose put a very aggressive EV number in our balances to show almost that, look, even if you assume all of this uptake happens, by 2050, we are barely below 100 million barrels per day.
And even the IEA, who I think we would agree probably the biggest bearers in the world, have under their base assumption by 2050 oil demand still being at 93 million barrels per day. Right. So it's not that modest of a decline.
No, I mean, sure, but you could argue that it could be 7, 10 million barrels per day higher or low. But and this is the same thing you mentioned, coal. We've been writing the obituary for coal for 10 years, and it's still kind of growing. So again, it plateaus, and I think we both know to just even produce 100 million barrels per day, we need $500 billion, if not more, per year.
So let's go there. Okay, 2050, we're both around by then. Where's the oil going to come from? we've got U.S. shale will have peaked in the next couple of years. Forget about 2050. Let's deal with 2035. We've already talked in this conversation. Peak U.S. shale, peak non-OPEC production. You've even referenced, and I'm hearing for the first time, peak potential OPEC production coming. When there's no substitution for oil for so many purposes. Sure, we can talk EVs and bioalgae for renewable jet fuel, all these things, but like petrochemicals, plastics, lubricants, all of these things where there is no substitution. Where's the oil going to come from?
Well, I think this is exactly where prices will have to do the work, right? So demand will have to do the work to meet that supply. And if we can't keep finding, and by the way, exploration-wise, we've done nothing for oil. Everything keeps going to gas. So if we just don't have enough oil, then prices will have to be much higher to then kill demand. And one anecdote I always find very useful, because people can argue about elasticities and stuff. April 2020, COVID, every single one of us was stuck at home, other than maybe parts of China. 97% of global industrial production was shut in. None of us were traveling. We consumed 80 million barrels per day.
Yes.
So, I mean, I joke that maybe we were all ordering toasters on Amazon.
We were.
Yeah, right. There were a lot of toasters being ordered.
Yeah.
But I think for anybody who talks about 40 million barrels, 60 million barrels, we're going to go down by 2050. I'm like, the whole world was shut down and we consumed 80 million barrels per day. How do we even get to those numbers?
Yeah. So let's talk price. I believe you're forecasting $81 Brent for 2025 at a time when you've got the last year of meaningful growth coming out of non-OPEC. You've got the last year of meaningful shale production coming on. Demand from China, we didn't really touch on, but will it improve? Will it not? It's unknown at this point. But under fairly bearish environment, still thinking about $80 Brent. Let's go to 2026 and 2027 and 2028. If we're directionally accurate that you've got non-OPEC supply rolling over, very modest growth, shale as well. I don't know what demand number is a good number to use, 1 million barrels per day.
Just under a million, maybe 800 to, sure. Exactly.
So where does price have to go? Where will OPEC Plus allow the price to go over the next couple of years to allow them to bring on curtailed volumes and normalize spare capacity?
So because we have the spare, we don't have to go to 100 plus, right? We can start to get the barrels back in the 80s, 90s as well, right? There should be enough availability over the next, like, let's call it towards the end of this decade. But then I think the question becomes what happens after that. If the demand projections are wrong, and I will say this, raise my hand and say, as an industry, we are terrible at forecasting demand. But we all always say, oh yeah, demand's about to peak, and it just never happens, right? Yeah. I think that's the real question, that 2030 period where, okay, you've brought all the spare capacity, but there's not that much OPEC. And I mean, you've seen Saudi Arabia saying, we're not going to invest any more in spare capacity. They are doing a lot more liquids to gas so that they can allow more crude exports. I think for me, that's the biggest question, that do you then have to have a step up in oil prices? Is it above $100 that you need, then demand starts to weaken? Or can you get it in the 90s? I think that's still to be tested, because there's obviously some stresses. One thing I will say about our price forecast for next year, the downside risk weirdly could come from a really strong US dollar because of a lot of Trump's policies. Right. I know that's not a fundamental thing, but just worth kind of highlighting. I still think, given how bearish the market is and the positioning is so bearish, the reality is that we might actually end up, reacting positively to the Iranian sanctions, etc. And I think that's why we've kept our price forecast. But yeah, there could be some headwinds, but the reality is that fundamentals would actually be nowhere close to as bearish as what the market thinks.
My dream is, like, next year is this digestion period where we digest the last year of shale, the last year of non-OPEC supply. Hopefully China improves. We're in this trading band. And then at some point next year, the world will look to 2026 and say, oh my God, like, things are much tighter. And not just 2026, but going forward. It's so.
And I think, sorry, I'm cutting you off, but I think that's a very important point, because this year we've traded 25. I've already had people say to me that they want to look at 26 balances. And if the 26 balances start to look tight, they believe that the market will start to, again, trade 26 and 25.
So let's talk Canada. There's a lot of our clients here, Canadian based. Obviously, we've got international, there's many people around the world will be watching this, but what is the significance and strategic value of Canada going forward to both the United States, if we're accurate that shale production is going to be peaking? We know the refinery complex needs Canadian barrels or heavy barrels regardless. But from a Canadian's perspective, what is the strategic significance of assets like the oil sands, assets like the Montney with condensate and liquids rich, et cetera, in a world where most countries are already struggling and will further struggle to grow production, and not just within non-OPEC, but OPEC countries as well?
I mean, Canada, the easiest one, it's a stable government, stable country. with so much potential, right? And I'll come back to the US, but every time I'm in Asia, they are desperate to get more Canadian molecules. Obviously, TMX helps. LNG Canada is another one. But when you talk to Japan, Korea, even the Chinese, they want to get more of Canadian oil. And then in terms of the US, again, tariffs wise, okay, we still believe that ultimately the Canadian tariffs will not go ahead. Maybe they stay at a very small level, but we think it's not going to go ahead. Mexico might. Mexico exports anywhere between 350 to 500,000 barrels per day of pure heavy oil to the US Gulf Coast. The demand for Canadian barrels, even on the Gulf Coast, will be absolutely enormous if that happens. But even regardless, right? Next year, we are closing down about 1 million barrels per day of refining capacity, including Lyondell, which takes Canadian crude on the Gulf Coast. But we're also adding about 1.8 million barrels per day of new capacity. So the net number is 0.8. Every single new refinery being added globally is a sour crude refinery. It's heavy or medium sour crude. So I think that's, for me, more than anything else, Canada's biggest advantage is that it is one of the last remaining heavy crude producers with growth prospect. Mexico, done. It's over, it's declining. Middle East, yes, but they're more medium sour rather than the heavies that a lot of these refineries need. So from that point of view, we are extremely bullish in terms of what Canada can offer. Now, I'm not going to get involved in terms of whether Canada will be able to offer, because that's very political, but I can definitely tell you the demand is absolutely there for this barrel.
Yeah, it excites me, and I'm always accused of hometown bias. I was a Canadian, but I look in a world where very clearly shale production is in its twilight. My view is shale companies have an inventory challenge, both in terms of depth and quality. And at a point, they will have to replace depleting inventory. And you look at the maturity of the US basins, like there's nowhere left with running room. And when I look up in Canada, we have companies in our funds with decades worth of inventory that doesn't erode over time.
Yes,
like the quality
exactly.
stays flat. So I'm excited, and I'm very happy to hear, perhaps it's confirmation bias, but the strategic value of Canadian oil sands, the Montney, the Duvernay, we as a country are so blessed with these assets. And I'm optimistic too that we'll have perhaps a different government next year that will also share that view. We're up on our time. I always find conversations with you to be very, very insightful. Our clients have tremendously benefited from you helping us navigate what has become a very, very complicated area.